What is going on? Welcome back to Trending Stocks. Today I want to talk to you about SoFi. Pretty exciting day, currently up 3.94%. I want to go over some of the current data points, break it down what's really driving it higher, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So today, I think we already knew was going to be a roller coaster in either direction. Same goes for tomorrow with PCE. But that's actually why it is up so high, because of good old GDP coming in very solid above the forecast. So 2.8 versus the forecast of 2%, plus initial jobless claims coming in a little bit lower than the forecast. So the market is once again normal. So meaning good data is actually represented as good, not inverse, and that whole crap that has really happened. So you do see more of a reconfirming of a second potential rate cut. So right now for the September 18th meeting, a 89.6% likelihood of a 25 basis point cut. And now for the November 7th, there is a 60.5% likelihood of another 25 basis point cut. And now a 6.5% likelihood of a 50 basis point cut during that. So in total, 75 basis points. All in all, pretty epic stuff. As of right now, though, you do see that there's no news, no SEC filings, nothing like that. So SoFi is just piggybacking off of the broader market. A good amount of volume, so 26.4 million shares being traded, 36.9 is the average. For those of you that kind of watch my channel, you know I like to analyze where that volume is coming from. So looking right over here, you do see kind of a lower amount of transactions occurring coming from institutions. So right now, only 4 transactions on the secondary market above $100,000. So it is fair to assume that the majority of the volume is linked to algorithmic trading and shorts. So algorithmic trading clearly is just interpreting a lot of this data that did come out as extremely optimistic, thus causing stocks to go higher. So nothing really wrong with that. Of course, if PCE is negative, then this is the downfall of algorithmic trading. It's rather hollow. So not really good support levels are being created. So again, something to keep in mind going into tomorrow. I always like to give you guys the good, the bad, and the ugly, and everything else. Starting off with shorts. Shorts aren't doing all that much, increasing 200,000 shares. 17.06% of the free float is being shorted. Works out to be 177.1 million shares overall are being shorted. Utilization 57.91. And then short score is 72.03. Kind of weird the fact that shorts have been really returning a lot of their shares kind of with relatively good data. And then of course, with today's phenomenal data, you have shorts just randomly increasing. So it doesn't really jive, kind of weird. So maybe they are anticipating PCE to come in a little bit worse for wear, but still something to keep in mind. As of right now, looking at options, 5.24 million in calls, not 500, but 1.04 million in puts. So you can clearly see some optimism associated to a lot of these. So even looking right here, this one was 679,000 in premiums. This one candle, so the 5 minute between 12:20 and 12:25, there was 1.3 million. So you can kind of break that down and see exactly what is happening. So if we sort that based on the premium, you do see a lot of individual transactions. So this is clearly institutions right here, very bullish, and it looks like it's all around 850 calls. And ultimately that is for August the 16th. So obviously playing into their earnings. So in case you guys don't know options, which on a side note, this weekend I'll do a dedicated video all about options. You never want to choose the closest strike price. You always want to choose at least typically 30 days out for the most part after a company's earnings. But still, definitely something to keep in mind that there's a lot of bullish options being done. And then over here, this large candle right here was more of a hedge. So looking at the premiums, there was one for 1.23 million, 850 call. It is divided between kind of bullish and bearish, so more of an iron condor transaction. And so overall though, I think just they're kind of hedging just in case it does go down. So it's this is why I like to analyze this type of information. But nonetheless, moving on, looking at the open interest though, this is for this upcoming Friday, so July the 26th. You do have 4,000 at that 650 strike price, 10,000 at that 7, 29,000 at that 750, and then 52,000 at that 8. So in theory, if SoFi is able to continue its momentum and close above 650 tomorrow, or 750, clearly I don't have my numbers right, but 750, then this is where you could see a nice little pop-up corresponding on Monday. So something to keep in mind. As of right now, there has been no real updates for any analyst ratings, nothing like that. Moving over to the Elliott Wave technicals. So it does have a pivot point of $6.94. So that kind of was touched today, pre-market. So kind of crazy stuff. So it's that ultimately is that 50-day moving average. So as long as SoFi is above that, then it is still anticipated to kind of hit within this range, so 850 to 880. I think ultimately their earnings will be that deciding push to kind of get it there. On the flip side, if it does break below this pivot point, let's say PCE is negative, then anticipate kind of the low sixes to be next. So definitely, like I said, it is a crazy roller coaster. It's kind of like a Disney ride or whatever you want to call it. It's fun, definitely very, very fun. As I mentioned in my pre-market video, just watch for 721. So that was strong resistance, now converted to strong support. So just watch for that to hold. On the flip side, 750 is going to be the next strong target / resistance level. So PCE is going to once again push it to either extremes, whether it retests this R1 or it does test this R2, or you never know, could test this R3 dependent on the data. And as of right now, looking on the actual chart itself, still higher percentile of the Bollinger Band stochastic, you do see it rather neutral, so not really considered overbought nor oversold. And then number of retail investors are starting to slowly get back in, as you can kind of see right there. So all in all, pretty mixed data. So you have some bullish, some bearish. When it comes down to that options data, options does not move the stock price. It is just merely a sentiment. I do like to bring that up because it kind of shows what big money is really feeling. So even though bigger institutions aren't really getting into SoFi through common stock, they are through options today. So as I say time and time again, research options, very profitable in either direction. So let me know your thoughts on that. I am going to quickly play like 1 minute from this video. This kind of encumbers at least this analyst viewpoint on a lot of the data.
We are approaching the first look at second quarter GDP, also the initial jobless claims and June durable goods orders. Rick Santelli is standing by at the CME in Chicago. Rick, what do you see?
Yes, and there's a litany of numbers today. We'll try to do them all very efficiently here. Initial jobless claims hitting the wires at 235,000. That's a bit lighter than we were expecting, at least following an unrevised for now, 243,000. 235,000, well, at 245, they upgraded last month by 2,000, which makes this month down 10,000. On continuing claims, the seventh consecutive week above 1.8 million, 1,851,000. Now, let's go to GDP. Our first look at second quarter GDP, better than expected, 2.8%. 2.8%. We're expecting 2%. Of course, if you comp that, that is going to be bumping right up against the last quarter of last year when it was up 3.4. If we look at consumption, also solid, 2.3%. Also the best since the last quarter of last year. And these are both following much lower numbers for the previous quarter, 1.4 on the GDP, 1.5 on consumption. Now let's go to the price index, shall we? This one comes in cooler than expected, which is not a bad thing. Last look was 3.1, expecting this to be 2.6, comes in at 2.3.
I like this guy's passion on a side note. Imagine if I had that. That'd be crazy. I'm more of a clearly mellow individual. I'm sure you guys can tell that by now.
The lightest level, well, since Dees, when it was 1.6. And once again, this number is moving in the right direction. Well, we have been at a lower pricing pace. Now let's look at the core PCE, expected to be 2.7. Last look, 3.7. Comes in at 2.9. So a bit hotter than expected, cooler than our last look. And of course, that compares with the last quarter of last year as well, when it was at a much lower 2%. Finally, durable goods. Durable goods. Now, these are preliminary look, and it's a volatile series, so these will be changed in a couple weeks and fine-tuned. We're expecting up 0.3. This is a huge miss. Huge miss. Minus 6 points.
I just want to stop him for a second, but he was talking about the core PCE. As you can kind of see tomorrow, this is what is what the Feds typically like to use. So this data as well is going to be coming out tomorrow. So when I'm talking about PCE, it's not that what he was kind of talking about right here. So kind of just wanted to distinguish the two.
0.6%. That is the weakest going back to that horrible month, which was April of 2020 when it was down 20. This is a biggie. And if we look at X-Transportation, now we know why the number was down. X-Transportation jumps all the way up to up 0.5%. Aircraft parts obviously played a huge negative there. Up 0.5%. Well, that is the best of the year. Last year we were up 0.6%. Now let's look at capital good orders, non-defense, air and aircraft parts. This is a proxy for capital spending. A very solid number, up 1%, up 1%.
Oh yeah, so yeah, I think he's just covering a lot of the other additional data that's not really all that important, in my opinion at least. So yeah, I think all in all, tomorrow is going to be PCE, big one for the market, and that one will really solidify this kind of November meeting stats. I think no matter, regardless of the data, September 18th is going to be set in stone, at least a 25 basis point cut, and that is going to be huge for the broader market. But again, with good data coming out tomorrow, this is where you see a lot of chatter about squeezes, not necessarily just with SoFi, but kind of a lot of heavily shorted stocks. So in my opinion, there could be a nice push higher. Shorts, I think, are just maybe doubling down on their last chance. So increasing that 200,000 shares are now 203,000. So yeah, I think tomorrow will be a very interesting day, and today's a nice fresh breath of fresh air, or whatever you want to call it. So don't forget to hit that thumbs up. With all that said though, appreciate all of you guys watching.